Good morning and welcome to NYFP. Today I'm joined by Rob Holderith, who is founder and president of Emerging Global Advisors. Hi Rob, thanks for joining me today.
Thanks, Remy. It's good to be here.
Well, you just rang the opening bell here at the New York Stock Exchange, and part of the reason why you're here today is to celebrate the launch of a suite of ETFs. Could you tell me a little bit about the products?
Sure. The GEMS, Global Emerging Market Sector ETFs, are 10 classic sectors: technology, telecom, utilities, etc. My firm was founded a couple years ago, basically with the intent to normalize emerging markets investing. So as a US investor, you have the opportunity typically to buy individual names, and of course there are hundreds of ETFs that trade, including the select sector spiders. So we're trying to provide that type of exposure and accessibility to emerging markets.
Well, Rob, right now a lot of investors are looking for a safe place to invest their money, and we're seeing safe haven demand drive up currencies like the Swiss franc, the yen, as well as gold. But tell me some of the advantages of investors investing in ETFs, especially in the emerging markets.
Well, emerging markets tend to be quite liquid for local investors, but not so accessible for investors outside of their local markets, especially in the US. The ETFs are a clean, easy way to trade here in the New York Stock Exchange. You get T+3 execution between 9:30 and 4. So if you want to trade India or Thailand or Malaysia, unless you have accounts in those local countries, in India it's even more complicated to trade there. It's kind of a democratization of investing for all investors in emerging markets.
Well, Rob, you've highlighted the advantages, but do you think there are any disadvantages?
Well, the emerging markets are, as the term would suggest, growing. They're coming into their own. So historically, markets like that typically have a little more political risk. They tend not to be as stable. Although these days, if you look down at what's going on in this country and in Europe, there are different political risks that are going on here. So I think emerging markets are really coming into their own. There are always going to be risks in having exposures in non-dollar based securities. But we think over the long term that the real and the Mexican peso, et cetera, might not be bad places to be.
Okay, Rob. Well, last but not least, before I let you go for today's interview, you highlighted some trends that you're noticing, but are there any tips you have for investors out there right now?
Well, I think what you need to do, Investing 101 suggests getting in front of the money, getting in front of capital flows. If you look at the amount of money that's being spent in infrastructure and that consumers are spending in Brazil and in India and China, I think the opportunities are there. We've had a great run here in the US, 1980 to 2000. Baby boomers really drove the markets and housing here for a long time. And we're a great place to invest still, but it's somebody else's turn to have really experience hyper growth. We think the BRICS and other big emerging markets are a place to do that.
Okay, Rob, well, thank you so much for your time today and congratulations on the opening bell.
Thanks, Remy. Appreciate you having me.